But the problem is that just above that, you have this like huge area of sideways action, which is around 28.5. So it's hard for me, I guess to suffice it to say, like the way I play it, the way I'm a trader is, and this is more on the trading side, but let's say we break up here and we go there. So now you have resistance being hit. So yes, you've broken this. Yeah, I mean, I've always been a believer that the charts always kind of predict, much the same as magic, is that, you see a pivot in a chart and then, or you see a resistance coming in and then you don't know what's going to be the trigger for the pullback, but then all of a sudden, like a news story breaks, right? Yep. Or something like that. And it's just kind of cool how that stuff happens. So, looking at the charts, I definitely think that's the predictor about what will happen. And I've never found, one of the things with, when you talk at like midterms and this, is sometimes, especially when it comes to politics, it brings in emotion, right? And emotion can be the downfall of the best investors in the world. So I definitely, I pay attention. Like I'm definitely on the zone of knowing what's coming up. Like, okay, when's the Fed? When's the midterms? But I try not to let it play too much into my analysis as it can start to kind of shade things a little bit. No, I definitely agree with that. I think in general, the market does agree and likes that. It's just not being surprised, right? The market likes to know the rules, and when you have one party controlling everything, then the rules can change, right? All of a sudden you can have new regulation or this or that. And so I think there is something to it for sure, where the markets would prefer gridlock, although, arguably as you'd still hope in gridlock that common sense would prevail, but that's not the case. Oh, wow. That's a good question. So I think that the market is pricing in the pause by us having this rally. Although today with the dollar popping, I think it's beginning a little bit more of a gray area. But I do think that a 50 in December would be a little much for the market to take. If the Fed said, hey, we'll do another 25 in December and then pause, I think the market would kind of be like, okay, at least they're pausing in 25, it's only 25. Yeah. But I think we'd sell off if they basically came out hawkish and said 50 again in December. We're kind of alluded to that. And going back to what we were talking about politics and how the gridlock is best, what's fascinating is that while the economy is good, I think gridlock the market does like. But what you'd have to be intrigued by and think about is if we slip into a recession, and let's say it's starting to get to a bad recession, and the Fed can't print us out of it because inflation's so high, does then the market regret gridlock because then you can't get any spending bills to come out to stimulate growth? And it's just, again, I'm just thinking, 2, 3, 4 steps ahead, but it is interesting to think about that is that it doesn't allow for spending bills to come out that could actually stimulate. So if Bitcoin breaks above my 25K, yeah. So, I mean, that's the big question is like, at what pivot point do you start to say, okay, this is the beginning of a new bull run? And again, for me, looking at the chart, that bearish pattern would get broken there around 25. But the problem is that just above that, you have this like huge area of sideways action, which is around 28.5. So it's hard for me, I guess to suffice it to say, like the way I play it, the way I'm a trader is, and this is more on the trading side, but let's say we break up here and we go there. So now you have resistance being hit. So yes, you've broken this. What I would probably then do, I wouldn't be a buyer here because I never like to buy into resistance. But what I would probably do is I'd expect a pullback to this line, which is also this high pivot, and then I'd be a buyer there. Now, again, whether or not I go like long, I'm not really a long-term trader, but at least that you could make a case for being a good support for another pop, maybe a move to the upside. But you're right in the fact that like every good trader looks at both sides, right? You can think that this is the side that's going to win or that you're going to be right on, but you also have to look at the other side and think, okay, well, where do I change my thesis? Where does my thesis fail? I agree. And like this was a slip up on my part too, is that I knew Elon Musk was likely going to be buying buying Twitter. And so I'm good enough where I do a hop, skip, and a jump. And I say, okay, well then Doge, it makes almost logical sense that buyers will think, oh, maybe he'll incorporate it into Twitter, so it's going to ramp. And I missed this one. I 100% missed it. Meta is kind of in that scenario where everyone's just panicking on it. You got this real emotional reaction off of the latest earnings and him spending so much money. But I'd be curious about your take on it. Nice. Yeah, pretty amazing drop. I mean, again, down 75% from $1 trillion company to 250 billion, and yeah, just to see some of the drops in tech, and it makes a lot of sense, right? If you look at like, and again, not to get off the crypto side, but like, Apple actually went up on earnings, but a lot of the other ones, Google, Microsoft, and Amazon, all got hit, and they've had so many years of just constant hedge fund and mutual fund and all these
Yeah.
fund money flow and just pension funds, and then you have to see that kind of give and take, right? So you can't just have a one-way street. We know that eventually you'll see that fear, and then it drives it in the opposite way. So the question is, like you guys, yeah, where's your max? Where's your max? And like you said, look for that reversal signal, bottoming tail, key trend line,
Yep.
something to kind of denote a reversal maybe starting. And
Yep.
then I also think it makes a lot of sense that we could be in a Bitcoin period where you don't see new all-time highs for a long period too, because again, you go back to, well, what was the stimulus for us getting out of the last bear markets? And you could arguably say printing money, right?
Yep.
Well, if the Fed is going to be hard nosed because inflation is going to stick around, let's say even at 4% for multiple years, well, it makes a lot of sense that we're going to have to wait till the economy gets so bad that the Fed is like, okay, we just have to print anyways. And maybe that's part of the trigger for that next bull run. But again, I can't see the Fed doing it until the economy gets in real bad shape. Really, not just a recession, but like a really bad one, like 2008, 2000. Yeah, that's a good question. I'm not 100% sure what I would go with. I think a lot of it will just be determined by how quickly this economy kind of slips into a recession. I mean, just
Yep.
looking at the housing market is in brutal shape right now. Not only were home prices ridiculously high and kind of pricing out people, but then you jack rates up from 3 and change to 7 and change% on
You
a
can't
30
afford
year,
anything.
and
Yeah.
yeah, exactly. And so, I mean, you're going to see a massive reduction. And then think of all the jobs that are tied to that, plumbers and carpenters and everything else. And it kind of the chain reaction through the system. And then you throw in some other things like
Yeah.
just a slowdown globally and other things. And I mean, it's hard for me to imagine that, we could stay strong for maybe another 6 months or so.
Yeah.
But I got to believe that the consumer at some point is going to fold. They saved a lot of money during COVID. People paid their credit card debt. But if you look at recent credit card debt,
I've heard
it
it's
is
up.
spiking again. Yeah, it's
Yeah.
spiking again
It's not
dramatically.
surprising
So,
company doing, but
but
yeah.
like what blows my mind is that maybe these companies that offer these, like, pay $20 a month for the next 20 years to pay off your TV or whatever, like maybe they don't care what happens in 10 years, but like, how do they not know it's going to end badly, right? I mean, at some point, people are just going to be like, you know what, my cell phones and my car payment are like the two payments and my rent. That's it. And then everything else is like, screw it. Like, let them come take it out of my home. And it's like, it's going to end badly, but these companies just offer these payment
Yeah.
plans. It's crazy,
Are,
right?
so
Sounds very much like 2007, doesn't it? I mean, it's just like history repeating itself, and people fall and companies fall into greed, which is just get that right. Think about the chain, right? You sell that car, you get that commission. You don't really care if that person in 3 years is still paying for that car. Yeah, I mean, I'm more in the camp that as the Fed gets closer to stopping hiking and maybe even pivoting in 2023 or 2024, I think the dollar has kind of front loaded a lot of its upside, and I think that again, the Fed has shown that they're willing. One of the things that caught my eye was 2 Fridays ago. There was that Wall Street Journal article, basically, which the Fed has used to get information out through the Wall Street Journal, and they basically said they're going to raise 75 and pause, right? And then literally an hour later, after that happened, the Bank of Japan then said, "Hey, we're going to start buying yen and selling dollars and supporting." So to me, it struck me as a very coordinated event, which means that the Fed is communicating with the ECB, Bank of England, Bank of Japan, and I the amount of breakage that would occur if we did see this max pain dollar would be exponentially bad. So for me, I'm kind of in the camp that I actually am a little bit more bearish on the dollar, and that makes me more bullish on gold in the near term. Bitcoin, again, being a risk asset, I'm still a little iffy on, because I think if the stock market still has a lot of downside, like I think it does, then I still think Bitcoin does get hit just based on that, risk divergence, or getting out of risk.